What is algorithmic trading anyway, and does it really work? And how do I get started? All of that's coming up, so stay tuned. Now overall, I like to break traders into three main groups, and let's cover those right now. Now, discretionary involves trading decisions that are based upon human judgment. And this is the classic example of a trader, at least that we have in our minds. It's the person sitting there typing away, looking at a screen, buying and selling a stock or a futures. You, as the human, you're making all the decisions on when to buy or sell. And those decisions could be based upon a feeling, maybe some technical indicator on a graph, maybe it's from a rumor, or maybe it's from a legitimate source, that you are familiar with. Either way, it's you as the person making the buying and selling decisions, and it's what most of us think of when we think of a trader. Now, this is a completely legitimate way to make money. There are successful traders that do this, but it can be very difficult for most people, me included. All right, algo trading is all about the rules. It's really opposite of what we just talked about with discretionary trading. In fact, it's nothing but rules, rules, and more rules. There's actually no discretion here involved and no human judgment. When the algorithm is running, which is a computer program that just executes buy and sell signals, well, it's a computer program, and that means it doesn't need human interaction. You're not going to move your stops. You're not going to pull the trigger. The computer is going to do it. So it's really taking all the knowledge of a trader and then some and approaching this topic completely different through a computer program and allowing that computer program to make the buy and sell decisions. Now, a hybrid is a mix of discretionary and algo trading. So, for example, maybe you have an entry that's based upon a technical indicator, and it's clear cut, and it's a hard, fast rule. But the exit on when to get out is up to the discretion of the trader. So maybe it's a gut feeling, or maybe it's just how you read the market on when you get out. So it's kind of a mix of both. There's some technical indicators and automatic decision making, and then there's some discretion. Now that we know the difference between algorithmic, discretionary, and kind of hybrid, let's focus on the algorithmic trading and take a look at a simple example. We are in the TradeStation development environment, and I created a new open canvas here to start our strategy. So the first thing is we want to buy when a 2-period RSI goes below 20. Let's do that first. So if the RSI and 2-period RSI, so we're telling, this is saying we're going to take a 2-period RSI based upon the closing price. That's what we want. That's the default for our buy. When that value falls below 20, then we're going to buy next bar at market. I don't need that parentheses there. So here is our first line of code, and that's going to buy. And our sell is going to be very similar. It's just if RSI close 2-period is greater than 65, then sell next bar at market. So those are our two main rules of getting into the market and getting out of the market. And it's just a couple lines of code. All right, we had another condition here, and that was we only wanted to open new trades if the price was bullish. That means above its 200-day moving average. So we have another condition here, and we're going to put and we're going to test again that the closing price is greater than the average closing price of the past 200 bars. So this condition here is testing that we're in a bullish mode. The closing price is above its 200 period moving average. And also this portion is testing is the 2-period RSI below 20. So when those conditions are met, that's when we're going to buy and then sell. Let's also set a stop loss here. Set stop loss. And we're just going to set that to $2,000 just off the top of my head, just for something to have. So we have just 3 lines of code here, and this is testing a 2-period RSI, and we want to load this onto a chart to test the effectiveness of this. Well, I have a chart here, and we can see here are the trades being taken. I also have on here the 200 bar moving average in black. That's what this is. And we can see that certain times when price goes below the 200 bar moving average, we're in a bear market, we're calling that, and we're not taking trades. It's not until price rises above that we start taking trades again. Down here I have the RSI indicator, so you can see when it goes down into the green area, that's when we're going to start making buys. Got some more buys here. And then exiting when it rises above 65. So you can see the type of activity. We can zoom in on that. So we're above the 200 period moving average. Price according to the RSI right here goes low, below 20. We buy and then sell when it rises above. Another one here, buy, sell, buy, and then we sell when it gets above. Very simple. Here we had a stop loss. There's one that was a loser. And we can also then, of course, generate a performance report. So this is the power of knowing EasyLanguage. You can test ideas like this, back test it over years and years of data, and you can see if this has any merit. And this looks like it does. We have over 200 trades. We're averaging $220 per trade, and we've netted $50,000. And you can also take a look at the equity graph. It's far from perfect, but this is a very simple bit of code that's testing a very simple concept using the RSI indicator. And it provides valuable information. Now, if the equity curve just went into the negative territory, would say this doesn't have any merit. But this looks like it has some merit, and it looks like it could be the start of a very profitable trading system. And this is the type of information you can glean when you know a bit of EasyLanguage. So look how powerful this is. With just a few lines of code, you're able to gather all of this back-tested information. All right, what we constructed was an algorithmic trading system, and that's what we have here. Everything is completely defined on when we enter and when we exit, and including a stop loss. So we have this very simple EasyLanguage formula that executes trades on the market, generating these results. This is a great example of a simple quantitative strategy, and it's something that you can learn to do when you learn EasyLanguage. Let's take a look at some advantages to using algorithmic trading. And the first one, of course, is the computer is going to execute a trade based upon your trading plan, always. So you're going to have flawless execution in the sense that when a trade appears, it's going to be taken. And when a trade is going to be exited, it's going to take it. So when those technical indicators say buy or sell, your computer is going to do it 100% of the time. Now, what this also means is you are going to be removed from the decision making as the weakest link. I like to think as people, particularly people like me who are not good at discretionary trading, we're the weakest link in the trading scheme. So no more moving the stops, no more missing the trade. And this goes to the psychology of people when they're trading. We've all had the experience with discretionary trading where you get scared and you're like, I can't put on another trade. I just had 4 losing trades in a row and I don't want to lose more money. The computer doesn't care. It's going to execute that trade as the trading plan says. It's not going to get emotional and make stupid decisions. It's going to execute the plan. So it's removing you from the entire decision-making process, removing the weakest link in your trading plan. Also, you can test trading ideas before spending money. This is extremely powerful. Think about it. You can actually test indicators, price patterns, and full-blown strategies, backtest them to see if they hold any merit. It actually helps you develop confidence that whatever you're going to be trading is actually has a chance of working. Extremely powerful. Finally, trades can be executed when you're not present. Now, if you're a discretionary trader, often you're going to be glued to that screen the vast bulk of the time, particularly if you're doing any type of intraday trading. However, with automated trading, you could step away. You can go to the bathroom. You can go to the kitchen, get something to eat or drink, and take a break. You don't have to constantly be watching the screen. Now, this isn't to say that it's 100% set it and forget it, where you could just turn your computer on and just check it once a week. That's not how it goes, because you do want to keep up with some of the disadvantages like internet problems. And let's take a look at those. Internet problems are a big disadvantage when it comes to this type of trading. If you have a slow internet speed, maybe your internet drops throughout the day, you may not even really be aware of it, but this can cause delays in execution. It can cause you to miss trades and just cause general headaches with automated trading. So having a clean internet connection, one that's up 100% of the time, or 99.9% of the time, is critical. You can also have computer issues, power failure, your computer can freeze. Obviously, this can be a huge problem. Now, this may not be unique to just system trading. If you're trading from a computer like any of us are, discretionarily, well, that's going to be a problem as well. Generally speaking, you're going to need lots of technical knowledge. You have to be comfortable with computers because you're writing computer code and allowing the computer to execute on your behalf. So there's some technical know-how. You have to know how your trading platform works. You have to be familiar with the computer language and how to get around some of these roadblocks. Now, again, I want to iterate, you can't leave the computer 100% on its own with automated trading. Just not going to happen, just because these issues can pop up, and it becomes your job as a trader from an automated standpoint to actually monitor the computer, make sure it's working correctly, make sure your internet's up and working correctly, make sure the computer's working correctly, and if issues pop up, it's your job to step in as the human and manage those and correct those errors. So you can't leave your computer 100% of the time. However, there are times when I walk away from my computer. I take a look at it when the market opens. I may watch it throughout the day, and I check it when it closes. Now, there's sometimes throughout the day I may go several hours without looking at the computer, but my system is making trades. And those are days where it looks like it's a quieter day and not a lot's going on. But if there's a lot of action, I'll be even checking more often. So you can't leave your computer 100%, but it sure allows you to walk away. Like I said, take a break, go for a short walk, get something to eat. And often my best trading, when I make the most money, is when I'm not in front of the computer looking at it. All right, that covers the advantages and disadvantages. So where do you get started in algorithmic trading? Well, I personally use EasyLanguage. Now that's a computer language for traders, and it's a great place to start in my opinion. Now I wrote this ebook specifically to help people get started using EasyLanguage, and it also comes with 4 training videos on getting started. So if you want to learn to become an algorithmic trader, download those 4 videos, get your free ebook, and hit that like button and subscribe to this channel. We're all about helping you become a successful algorithmic trader. And that's all I have for you now. Until next time, thanks.